Craig, it's good to see you again. On the split, what do we think the motivation is? Is it about changing the investor base? Is it about some sort of index inclusion, something else?
So companies usually put splits in place when they're really confident that things are going to go very, very well. The last stock split was a tremendous catalyst for Tesla. If we look forward for 23, 24, 25, new models like the mini car, you have Germany ramping, you have so many initiatives like India that they should really give us some pretty good visibility on. Hopefully this year. It's been too long, but these are big levers the company can pull and will pull. And, I think there'll be positives in the valuation. That's why I keep the neutral despite being bearish.
Right. Yeah, 250s, rather bearish. On production, Giga Berlin, we've had some commentary in recent days that's going to help at least Q1 momentum on delivery. But now we have Shanghai to worry about. Which is going to win out?
I think there's puts and takes. It's very, very hard to know exactly at this point. If people want to know, they should look to the registrations data from EV volumes. Victor Earl and his team out of Sweden do a phenomenal job there globally. We're going to have to wait for that data to really know. Reality is, I don't think we have a miss coming anytime soon. I think this is a company that will continue to beat on deliveries, continue to do a spectacular job. The question now in my mind is, 1.5 million, really the number for this year. Did we beat that? Quite possibly we do. So Shanghai is a speed bump, but it's not something that we see as really a major impediment. If anything, there'll be pent-up demand in China for those vehicles.
So, Craig, with Tesla trading over $1,000 a share right now, why the $250 price target? Why do you hang on to that?
So you look at the largest automotive company globally, Toyota, right? They have about a $300 billion valuation. They sold 9 million cars last year. There is nothing that Tesla has that Toyota doesn't as far as technology. Toyota has a much closer relationship historically to Panasonic than Tesla. Tesla's got a $1 trillion valuation. They sold 900,000 cars. Okay, we should give them a very chunky premium for leadership in EVs, right? Really creating the EV market. But I think 300 billion is probably closer to where this thing should be, 250, 300 billion, not a trillion, because by the end of 2025, there's going to be 500 EV models on the road. There's 60 new EV models coming this year. Many of them will be successful. Tesla's just done a spectacular job, and, they should be rewarded for that. But a premium valuation would be, a third of where the stock is now or a quarter.
Yeah, I get that. And certainly in terms of absolute numbers of vehicles that are being sold and manufactured, Tesla's still a smaller player. That being said, there has been this emerging narrative that Tesla is kind of the maturing leading option when it comes to EVs specifically. You don't buy into that?
I completely buy into that. I think Tesla's a very exciting, interesting company. I just don't see them doing 20 million vehicles. I think there's going to be too much competitive pressure. And others that have moved fast and maybe not done the optimizing of their technology. Porsche's a great example. They should have had silicon carbide in their drivetrain. Will make those changes, and they will all be fully implemented by 2025. Tesla's valuation is really a function of the scarcity of successful companies in the sector. By the end of this year, I think we're going to start seeing a few more that are treated with fair to optimistic valuations. We've already seen a couple of those. And that's why I'm saying I think people are much better off in the small cap names right now.